And we're live. Hello guys on YouTube, and hey everyone again. So I'm going to start with Ethan and then J-Bone. If you guys have any questions, feel free to ask. For those who are new here, you could send us a screenshot of your trades in the off-topic chat, preferably 2 different time frames, and preferably having at least 20 or 30 minutes before your entry so that we can look at the bigger picture and can analyze it together. And let's start. So Ethan, you traded ACB, you tried catching this thing to the long side. I assume this was a parabolic reversal? Your entry right here, or your trade right there? And you tried to catch it one more time there. So I like that it's extended from the 9 moving average on the 5-minute chart. That is the first thing I try to look at when we are looking for parabolic reversal. I like that it was hovering around the daily level, which is another good confirmation right there. I like that we have a confirmation candle, a hammer right there, and a hammer with a fake breakdown on the 1-minute chart right there. We don't have any climactic volume right there. The only thing we need to have now is a good risk to reward. With this entry right here, I don't really like the risk to reward. I can't really put the entry or the stop loss right below this 9 moving this 1-minute doji right there, because I expect that it could simply pull back and make a higher low, which it did, and then come back up. The best stop loss is the level it started consolidating. Ryan, the climactic volume is just a confirmation. It could be there, it could not be there. Same as the daily level. It could be there and it could not be there at the low of the day. If I have it, that'll be good. It's not always that I take reversals without climactic volume. I definitely want it. If it's there or if it's happening, I would like the setup much more. Same as I like to see a daily level on the way. If it's not there, it's fine, considering that we have the other indicators. But if it's not there, I can't really force it if the setup is there. Now, the entry point for a parabolic reversal right here, I think it's just a little bit late. If you quote it right after this hammer, this one right here, when it made a higher low right there, if you quote it right here after this fake breakdown right here, this would be the best entry you can get with a really tight stop loss and a target the 9 moving average on the 5-minute chart. Like the entry would be somewhere around 580. That will be your entry, somewhere right there, 580. Stop loss will be right below this body right there, 570. Let's say it's 72, but let's say 570. 10-cent stop loss, and the target is at least 1640, 1650. Which is 6 or 7 hours right there. Getting the entry right here just messed up the risk to reward, unless you're having another stop loss, which you did. I see that you got stopped out here. It means that this was your stop loss. But yeah, this was a little bit of a late entry after the move happened. A pullback was definitely expected. I like that you re-entered once it made a higher low and bounced off a daily level. You had a really tight stop loss, I assume, because of this partial. So yeah, the entry wasn't bad because you entered after a pullback. This at least is good, but this entry right here, it was a little bit of a chase. What you mean by climactic volume? Yeah, Ryan, that's right. It's exhaustive volume, and you love to see at least double of the average volume you see. Let's say that this is the average volume right here, somewhere right there. You want to see volume which is visibly at least double of the previous volume. If you have this climactic volume right there, it means that stock is starting to get exhausted, and that's usually a good sign of reversal. Here we didn't have it, but we had other indicators to confirm a parabolic reversal right there. So good job, Ethan. Yeah, TC, if you can send it in the off-topic chat so that I don't forget it there. Now let's see what J-Bone did there. He took JD for a 5-minute open range breakout. Now 5-minute range breakout confirmation. It was strong in the pre-market. Bullish engulfing candle on the 5-minute chart. This candle engulfed the previous candle. Anti-pattern, the SPY headed lower. so he didn't like that JD was going to the long side while the SPY was dropping down. And we know that JD, Apple, AMD, they tend to follow the SPY sometimes, especially if the SPY does a sudden move, it could influence the stock. The entry was at 50.70, stop loss, view up, tried to get 2 to 1, but got stopped out at -1R. Thoughts, no technical level for an entry or an exit. I agree with that. The entry was a little bit late, and I will explain why I don't really like this open range breakout right there. Did not know the risk to reward before the trade. That's also true. This was a really huge risk right there. The stock already did a huge move, and you want at least double, right, for 2 to 1. So you would expect the stock to make this whole move right there, which is around $1 move or more than $1 move, without pullbacks to get to 2 to 1. Had I known it, I would have waited for a better entry and may have not entered at all. So guys, look at this. JD, it was a 5-minute open range breakout. And remember what we said in our previous reviews? Sometimes you could have a new 5-minute high on a after a 5-minute candle. It looks like it's a 5-minute open range breakout, but it's not literally an open range breakout. Similar to having a new 2-minute high after any candle, it doesn't mean that this is a good candidate for a for a 2-minute open range breakout. In this case, the 2-minute open range breakout is a good candidate, and we'll go through this one. But let's go through the 5-minute open range breakout first. It dropped down in the pre-market. It is strong on the daily. It's at all-time high. J-Bone liked it for a long. I also love it for a long. Definitely, I will have some long bias. Sometimes it's bad to have some bias when you are trading stock, but personally for me, I find that having bias is a little bit helpful. Why is that? When I'm not biased at all and I'm trading only what I'm seeing right there, if the stock looks weak, I take it to the short side. Once it starts looking long, I flip and take to the long side, short, flip to the short side. At least in this case, I try to get an entry according to where I'm biased with the stock. Now, looking at JD, strong in the pre-market. Not strong, but at least it was holding up with higher lows. It's strong on the daily, and now it came back up. After the drop, it started squeezing up, and that's definitely just increasing my long bias on this thing. But it doesn't give us a good entry. It moved from 49.30 to 51. It's 70 cents move with no pullbacks, right? So yes, it dropped down. It looked like a shooting star at the high of the day, dropped down and started coming back up. But this is only a small 1-minute candle inside a 5-minute candle, which is so huge. Just look at this 5-minute candle. It's literally almost the maximum move it did on a 15-minute chart, right? Like this candle right here on a 5-minute, this candle right here on a 5-minute right there. It's as huge as those 15-minute candles right there. That's why I would have simply avoided this open range breakout. I would have waited for a pullback. Let's say it pulls back to view up or a little bit below view up, comes back up, and then I'll take it. Now let's go through the criteria for open range breakouts. One, we want a small candle, right? A candle which is making a move smaller than the average true range. And just by the look on JD, if you look at this, what's the average true range on JD? You have a $2 move right there. You have around $2.50 right there. You have around $1 moves right there. So basically the average will be around $1.50, right? $1.50 average true range. JD did a move of around 70 to 75 cents. So basically, yes, it have around $1.50 right there. It's not that small, but yes, at least smaller than the average true range. Is it close to view up? It is close to view up with the direction of the gap, which is really good. But another thing I love to see is a mini setup in the 1-minute chart coinciding with the 5-minute open range breakout, but there is no mini setup right there. It's just going straight up right there with no pullbacks. Where will I put my stop loss? You could put the stop loss at view up, but view up in this case, it's not a technical level. It went through it without caring about it on the way up, and it went back to it. Yes, it could have bounced right there, but there is nothing telling us that it will hold it, because it didn't hold it at the open. It didn't hold it in the pre-market. So this is not the best technical level to have a stop loss there. You could put the stop loss there just because you want to give it some room, and I assume that that's why J-Bone put the stop loss here, not because it's technical level, but because he wanted to give it some room in case it's pulling back. So yeah, this was a little bit late for an entry. Now look at this, it's going up, pulling back, coming back up, and look at this again, a little bit late of an entry, right? You got into the long side right below the high of the day. It already did a huge move. Not sure where to put the stop loss at. The best technical level to have the stop loss right there is this area right here. If you want to give it some room, you could have it at half candle right there, but it already did a move again around, what's that, $1 move right there, or around 80 cents move right there with no pullbacks at all. Again, this was a little bit of a late entry. Now, why would I like this candle right here for 2-minute open range breakout? Now, yes, it is below VWAP, but again, JD is at all-time high. It's so strong right there. At the open, it started selling off. It broke the level you have right there. It broke the 15-minute candle right there, and after breaking down, it started squeezing up with volume. You see, this is volume. It's even bigger than the opening range volume. So once I see it closing as a hammer, getting back into the range, this wouldn't be a bad try for a long with a stop loss right below the body. Not the perfect setup, but looking at all what we have right there, this wouldn't have been a bad 2-minute open range breakout. So it made a good candidate of 2-minute open range breakout, but not really the best on a 5-minute candle. King, you did badly on ACB, that Walmart today. It's a learning process. King, I did also really bad on Walmart today. I had 3 losses there, but then I had really one good winner, which saved my day. It was a little bit tough, but yeah, that happens. We all learn from our mistakes. Okay, now this trade took actually a lot of time. Let's go a little bit faster through the rest. Daniel and then J-Bone again. So Daniel, what did you do? Traded mRNA, took it to the long side. Not a bad entry there on the 5-minute chart. Let's see the 1-minute chart. Not so bad, but I don't like the moving average. This moving average right here, I don't like it so much. I hate the 50 moving average on the 1-minute chart and the 200 moving average on the 1-minute chart when I have them on my way, especially when they are sloping down. So look at here. mRNA is strong in the daily. It's been in play lately. It gapped up, I assume, today. Started selling off in the pre-market. The market opened, it also started selling off. Found some support at $75 and started making higher low waves. I love that. It's dropping down. You see those waves? It sold off all the way there. It was making lower highs and lower lows. Lower highs and lower lows. After this area right here, it started making higher highs and higher low. Higher low and higher high. Higher low. So basically, yes, the trend has changed. It started going to the long side, and I love that you are biased to the long side here, not to the short side. I would have been the same thing, biased to the long side, especially that it broke VWAP, came back down, pulled back, and started going back to VWAP. You took it on a new 5-minute high, could put your stop loss at a new 5-minute low, which you actually did, so that was really good. Made a little bit of move in your direction. Now that's still good. You held it through this pullback. I love that as well. Why is that? You see that it's not really trending up clearly, but every time it goes up, it makes a higher low. So this is an uptrend, right? Now look at this. All the way till here, I'm still long biased on mRNA. Once I see this, I'm starting to doubt the long on mRNA. Why is that? Every time we were having a higher low wave right here. But here, yes, we had a higher low there, but the high was lower. This is the high, this was a lower high. Basically, this shows you that it's a little bit exhausted, that it can't go anywhere higher. But no problem, we could hold through this one. We see that it's making a higher low right there. Maybe it will break up right now. It comes back up, but look at this, it's still struggling. It can't break up. Once I see this, that it finally started struggling, that it can't actually go up and starts dropping down, that's where I'd actually bail on the trade at break even. Right here, I will not bail at break even. Definitely, I'm not doing that. But right here, looking that it's struggling, and it actually broke this level right here, but wasn't strong enough to get even to the next level right there and started selling off, that's where I'd actually consider exiting at break even. So the trade was good. I like it. The entry was good. You held it to your max loss, which is still not bad, but you could here bail at break even. It would have been totally fine. Then you took it to the short side once it broke VWAP as a fake VWAP breakout. It started squeezing down, it started making lower highs. You saw that it rejected VWAP, a small shooting star on the 1 minute chart. You took it to the short side, it worked a little bit in your direction, but then just got you subbed out. So both of your entries, both of your trades, they were really good, but in this stock, looking at what's happening right there, was just a little bit choppy and was a little bit tough to trade. I hope you made it all back on other trades. We'll take a look at them. Let's see first what J-Bond did on mRNA. Now, set up 2 minute open range breakout. The confirmation, and look at this. This is a 2 minute candle, and you took it. Was this a long and a stop out, and then another long and the target, right? J1, okay. So the indicators you had, big volume and price movement just before the market, the open showing strength, and you could see here that right before the open, it started getting some volume spikes in the pre-market, and that got him a little bit of long bias. Moving average support on the 1 minute chart, 2 minute chart, 5 minute chart, and the 30 minute chart. So it was above the moving averages on all the time frames. Big gap up from the previous day, and look at these guys. Big gap up from the previous day and near the previous day close. It wasn't a gap up, I think this was a gap down looking at this because it opened right here. But I'm looking at the previous days right there, it was still in play. It had good news. I think there were some vaccine news right there. This is still a huge gap right there. It was still strong on the daily. Definitely not bad. Watching it to the long side right there. Entry 72, 78.30. Now again, this right here, if you look at these guys, wasn't bad, but I don't think it was really good because it did the move in the pre-market. No pullbacks. What's that? Around $2 move, right? $2 move. It's far from the 9 on the 1. It's far from VWAP. It did the move definitely. If I see the stock opening so far from VWAP, I wouldn't really like it for a long. I would wait for a pullback, which you did after that. It was smart that you kept watching it and entered after the pullback. But yeah, I'm definitely not taking stocks at the open when they are so far above VWAP. And that's the main reason I didn't trade UAL today. Oh my god, I thought it was something important. UAL, let me see what we did there. You look at this. It also opened so far from VWAP. It was strong in the pre-market, but again, it opened so far from VWAP. That's why I didn't really like it right there. Right at the open, it just did the move in the pre-market. Same here, think here, it went up far from VWAP right there, and you waited for a pullback after that and you entered. So this I like, but one thing I don't love doing is entering when the stock is dropping down. Exactly, J-Bond, that's it. I would have waited for the candle to close just to see what it's going to do, because the next candle you could see here that it did a new 1 minute low, and I think you were lucky that it didn't flash down after that new 1 minute, right? It could have just simply continued dropping down. We would love to see what's happening. And I do take sometimes these aggressive entries, but in these type of aggressive entries, I do this. I wait for the candle to close. I wait for the next candle to open. If the next candle immediately starts going up, I just ignore it. I want to see that the next candle starts going against me. I want to see the next candle red. And right when it turns from red to green or to white, that's showing me a little bit of strength. Right after this week, I take it to the long side and then put my stop loss below the wick and then just see what's going to happen. But it's a little bit risky to get in on the way down. Most of the times when I do that, I usually fail. But yeah, this was really good. I love how you held on to this one. This was a really amazing trade. 3 to 1. That was a good one. Could this be a 5 minute open range breakdown? Let's see. This is not 5 minute open range breakdown. This is an engulfing crack setup. What's an engulfing crack setup? A strong candle. If you want to take it to the short side, going to the long side. Next candle engulfs it and goes to the short side. Then we're looking at the next candle, and that's what I love to see. I want to see the candle green. Then I want to see that the candle moving from green to red. That's my entry to the short side. That's my stop loss right there. And then I just go for the risk to reward. But taking this thing around here to the short side for a 5 minute open range breakdown, it's not, because it started going up and then went back down. It was close to candle close and was hesitating, so I got in. Yeah, definitely. It's tough to just look at the pictures right there. When you are watching this thing live, you see the speed at which it was going down. You see when it hesitates at some level or gets brought up. You see the level 2 if there is a wall or anything like right there. Here, unfortunately, I just can only look at the picture, but you still managed it so well, and I love that you held it. You basically eliminated the loss right there and turned it out into a winner. Now let's see what we have there. Daniel, a rising devil. This here, I wouldn't call it a rising devil. For a rising devil, you need the stock in the pre-market to be selling off below VWAP. Then you want to see it opening and squeezing all the way to VWAP, hesitating around VWAP. That's where you take it to the short side, and then it just sells off. Here it's not a rising devil since it was strong in the pre-market and it opened strong after the market opened. So Daniel, let's see what you did there. You traded safe. Not a bad setup. I love this thing. It was strong, opened up strong, pulled back to the 20 moving average in the 5-minute chart, held it, came back up, dropped down, held the 20 moving average in the 5-minute chart. You have sort of a W shape after a strong move to the long side for an ABCD pattern. I love that. You are entering on a new 5-minute high. You're adding to your position at the breakout of the consolidation right there. It makes a small move, but then just simply gets you stopped out. The setup was totally fine. It was good. It just didn't work out. I don't think it was bad. It was really smart. I love how you were patient for an entry. I love how you added after the breakout. If the setup worked out, it would have definitely went way more than that, but yeah, you managed it well. Where is the ABCD pattern? Okay, this is the A, this is the B, this is the C, which is the end of the pullback, but I don't like this is the D. Normally for theoretical or for the common ABCD pattern, which is we are usually trading, it will be the ABCD pattern. Now, if you watch my webinar on ABCD patterns, I don't love this pullback. This looks like a parabolic pullback, so most of the time after I see this, if I see a new 5-minute high, I usually ignore it because I'm afraid it will make a lower high, which it did right here, and then just simply sell off. I'm usually afraid the stock will do this after a parabolic pullback. So what I'm doing on this type of ABCD patterns, I wait for the stock to do a lower high, which it did. I wait for it to find a support, and I want this support to be higher than the previous support, just to have a W shape. That will be my entry right there. That will be my stop loss. If you want to be really safe, you'll put your stop loss right there. But to get a really good risk to reward, because most of the time, if the ABCD pattern is good and if it's working out, most of the time it will work after the higher low. So basically, this is the A, this is the B, this is the C with a W shape right there. You take it to the long side right there, and you expect a breakout, which unfortunately failed. Not every setup works immediately, right? So let's see what you saw there. SRNE. We took this thing to the short side. And look at these guys. A weak stock, pulled back to view up, pulled back to view up, parabolic pullback. It dropped down on the 1-minute chart. You see this? It dropped down right there. Came back up on the 1-minute chart. Dropped again. Did some sort of W shape on the 1-minute chart. This is a little bit tough, and I usually don't trade these type of setups because the risk to reward. I mean, look at this. This was just an engulfing. I started just adding more strict rules. I don't get in after engulfings. I usually love to see confirmation candles, and the confirmation candles, depending on the direction I want to trade the stock to. If it's to the downside, I want to see shooting stars or dojis. But definitely, I'm not trading engulfing candles. Engulfing candles for me start to be just choppy, and I just avoid them. But the setup was good. It dropped down, pulled back, gave you a new 5-minute low, sort of M shape on the 1-minute chart, but I wouldn't call this an M shape later on the day because it's on the 1-minute chart. I love to see this M shape before 10. After 10, sometimes I would go for it, sometimes I wouldn't. I don't love the engulfing, so I would just avoid it. But look at this. This is what we were afraid of, right? the stock is dropping down, pulling back, and we're afraid it will just make this is the break, right? We're afraid it will make a higher low. Basically, this is an ABCD pattern. There was the A, there was the B, there is the C, and we're afraid it will make a higher low. See, it's the same pattern we looked before, but flipped upside down. So basically, we're afraid it will do a higher low and then shoot up. So after these parabolic pullbacks, right there, especially this parabolic pullback was in the 5-minute chart, we want to see, you see, this is the higher low. We're afraid it will shoot up. We want to see it trying to shoot up, failing to shoot up, dropping down, giving you the M shape. You see, W shape if you want to take it to the long side on an ABCD pattern, M shape if you want to take it to the downside. This is the M shape right there. This is the M shape right there. And look what we have there. Confirmation candle, something I love to see. A wick on the upside, it's almost a shooting star, not shooting star, but almost a shooting star. Then you take it to the short side on the next candle. So you see a setup on the 5-minute chart. That's the setup on the 5-minute chart. B, C, D. And you are seeing an M shape on other time frames. You see the confirmation candle on smaller time frames. You take it to the short side here, which will be somewhere right there. Put your stop loss above the high, which is the M, right? And then just go for the move. I see that this is where you got stopped out instead of entering, but you still re-entered right there. Same thing. M shape, new 5-minute low. If you were waiting for a pattern on the 5-minute chart, put your stop loss right there or right there, and this move was really good right there. Yeah, stock operator, that could be. So let's go for the next one. So you traded UAL there, tried to wait for an M shape in 1-minute chart. Maybe the hammer in the 5-minute chart was an alert to try to stay out of the trade. And yeah, exactly. And this is something we talked about, guys. Remember in our previous trade reviews, I usually hate taking reverse ABCD patterns against the hammer at the low of the day. I wouldn't talk about these hammers right here, they were also looking so bad, but the first, even if those weren't hammers and those were engulfing candles right there and you entered after that, I wouldn't take this ABCD pattern. First of all, we broke the low of the day. You see, we broke the low of the day, it wicked down, immediately got bought back up. What is this, guys? This is a fake breakdown. This is what stock operator I think was talking about, right? Stock operator, engulfing candle after the break of the low of the day as a fake breakdown. Then you could take it to the long side right there and put your stop loss somewhere right here. Was that stock operator what you meant right there? But yeah, anyway, you see it broke the low of the day. That was a fake breakdown and it came back up right there. That's the first thing. Exactly. See, guys, this is what we talked about. This is the climactic volume. It is way bigger than the volume, which was right there. This is an exhaustion volume, which is a volume which is indicating a reversal right there. Now, once I see a hammer at the low of the day, even if those weren't hammers, I wouldn't take this reverse ABCD against this hammer, especially with that increasing volume at the low of the day, because this is just a reversal pattern right there. Now, except for this, you're having two hammers right there, right? And along with that, you're having a hammer before your short position, which is showing you just buying strength right there, right? And after that, it breaks down on this candle, but gets squeezed back up. And look at this, with increasing volume again. So basically, you could have just exited with a small loss instead of holding to your max loss per the trade, but there were enough signs just telling you that it's better to just avoid this trade. I mean, it's totally fine. I mean, yes, maybe there are too many mistakes, you see it right now, but sometimes it's tough to notice this in a live trade. Now we will be seeing them in hindsight, but after that we'll be seeing them on a live trade. Now let's see what happened there. Now I like this short right there. Look at this huge drop right there. Pulled back. It started making higher lows right there. Higher lows. Broke the high. At the high, it did a reverse hammer there. It did a huge wick on the 5-minute chart, which is showing you a selling pressure after the breakout. A doji with a lower high. This is still showing you that the stock is still weak. You took it to the short side on a new 5-minute low. on an M shape on the 1 minute chart with a good confirmation candle on the 1 minute chart. See, now here you're having a lot of candles which are showing you confirmations to take this trade. You took it to the short side, you took it to the short side. I would put my stop loss right there or right here. I usually start going for a really tight stop losses, especially with confirmation candles. Then you took your partial. This is a good partial right there, yeah. I would have taken it as well right there because of this level right there. Next candle, next partial will be somewhere right here. Then the low of the day, but it didn't go there. It did a hammer on the 1 minute chart, making a higher low, which is not a good sign. Made a new 1 minute high, which is a good sign to take partial, which you did right there. Another hammer where you exited all out. So that was really good, and I love your partials and exit. Charles, let's see what you did. Traded JD to the long side. Okay, let's see what was there. So one reason I wouldn't have, not one reason, actually multiple reasons I wouldn't take this unless that was their target here. So I wouldn't take this to the long side because of that selling pressure I have right there. Selling pressure right there. You're having a double top on the 1 minute chart right below a strong resistance area. It sold off. Yes, it held view up right there, but usually I would expect it to do either higher low at best case scenario, which happened. It will get to this resistance right there and then drop down. The risk to reward was there, your entry, your stop loss, and your reward, which is there, but it's tough to get the best case scenario every time, right? Instead of taking this trade, I would have waited for another setup which is showing me more hope that the trade will work out. In this case, it wasn't bad because again, the risk to reward was there. You had your resistance area, you traded the range, which it held. You got in as close as possible to the support, and you partialed right at the resistance, which was smart. I would definitely not take this thing to the long side because of this level, unless this level is my target, and that was your target. But yeah, not the perfect setup, but still not the worst setup, and you managed it well. Valentin, let's see what you did there. Okay, traded Walmart. Walmart was really tough today. So look at this. The first thing was a parabolic reversal, I assume. It was so far from the 9 moving average on the 5 minute chart. It was so far from view up, sold off all the way down. You're having some buying pressure, closing as a reverse hammer on the 1 minute chart, then again buying pressure on the 1 minute chart. New 1 minute high. If you could get this entry right there, it would be amazing. If not, then this entry was good. For me, at this candle, this would be my stop loss. I wouldn't put my stop loss anywhere there because it's already breaking this range we are having right here. So this was already a break right there. You take your entry, put your stop loss, and then just go for your reward. If you get your 2 to 1 or 3 to 1, just take partial. If not, just hold more, or because you still have a lot of room all the way to the 9 moving average in the 5 minute chart, which unfortunately it didn't hit. After that, it's dropping down. This was a parabolic pullback. Drops down, higher low, which I don't love to see because I'm afraid it will just simply shoot up after that. So what are we doing? We're waiting for an M shape just for a confirmation. And there was it, the M shape. You could take your entry on a new 5 minute low, but for that we need confirmation candles on the 1 minute chart. That was around 10:20, and around 10:20 or after 10:15, you're having this confirmation candle. You see here? I'm not sure if you can see it because it's so small, so I'm going to zoom into the 1 minute chart now. We saw the setup on the 5 minute chart. Now we're looking for an entry on the 1 minute chart, and that's it. Reverse hammer here, reverse hammer here. Did break out, but still selling off. You're having that M shape on the 5 minute chart. This is the confirmation candle on the 1 minute chart. Not a bad entry on a new 1 minute low, or similar to what you did right there. You waited for the breakout of the support area for a small descending triangle right there. Descending triangle with an add. Took it right at the breakout, and remember how we treat descending triangles? We either enter before the breakout with a stop loss the last wave, or we enter as close as possible to the resistance, which could have been right here because we're having the confirmation, or we're entering right at the breakout of the descending triangle, which should date right there. Stop loss, if you are entering here or here, would be the high of the wave. If you are entering right for the breakout, only new 1 minute high, or at least that's what I would do. Drop down, came back up, reverse hammer right there, added, and you covered by mistake, so it's not bad. You kept holding through the setup all the way to the daily level. I love your patience. And then you started partialing when it started making those higher low waves, so that was good. Okay, that was your all out because got closer to your target. Then you took it to the long side. Why did you take it to the long side? Break out after a double bottom. So you saw this, let me see the 5-minute chart for that long. So this was your last setup, you took it to the long side. I see the double bottom you are meaning. You mean that it did a bottom here and a second bottom with the higher low right there. But yeah, you said it, chasing. If you could, it's better to try to catch an entry as close as possible to the support. Here, you bought it into the face of the resistance. And remember guys what I said, I hate the 50 and 200 moving average in the 1 minute chart because the stock, a lot of times, it bounces off those moving averages. And you could see here, it bounced off this moving average and started dropping back down. It didn't fail, but since we know that if the stock makes a huge move and it usually bounces off the 50 moving average, we know that we could get a better entry. Better not chase it, wait for this pullback, and if you are still long buys on it, get a better entry with a better stop loss on this thing, or try to get a good entry. Even though you are going into the face of the 50 moving average, you know that you got a good entry, and if it drops down, you could always bail at break even right there. 11.15 would have been a better entry. 11.15, yeah, exactly. At this arrow, this would have been a good entry. This would have been a good entry, and you still held it through the consolidation, which shows me that you had a good technical stop loss there, partial right at the peak. And look at these guys. I love how you draw this line. You see that this is a previous support right here. We know on descending triangle, if the setup is good and if it's working, it usually breaks and immediately works out, or sometimes it pulls back and the previous support could act as a resistance. And look how smart that was. You took a partial exactly at this level because you knew that the previous support could be a resistance, and that's what happened. The previous support started becoming a resistance and then it dropped back down. So this partial right there, I really love it. That is really smart. Yeah, good job. So let's see what stock operator did. Stock operator traded UAL, took it to the long side of the pre-market. I can't really analyze this because I can see nothing there. But remember, I actually can. I remember this thing. UAL in the pre-market, it was already extended from the 9 moving average on the 5-minute chart, and it was extended from view up. And let me show you that. So when I see that the stock is so extended, I usually avoid chasing it. You see this? On the 1 minute chart, if you look at this, you would love it, right? It is just looking like an ascending triangle. It looks like it's going to start breaking out. Not a bad long game in, we would assume. But on the 5-minute chart, it's still far from the 9 moving average in the 5-minute chart. There is still a gap. The candles aren't the best there. And let's get back again to UAL there. You took it to the long side at the pre-market, but that's a place where it was good to look at it for a reversal. It did break out, and you were right about breakouts. And most of the time, not most of the time, a lot of times they do break out after the consolidations. The problem is you don't know how much they are going to run after they are breaking out. So you could enter, you could have your stop loss, but the stock already did a huge move. The pullback wasn't huge. So even if it breaks out, we don't have much hope of it running. And it went exactly to the daily level. I assume that the risk to reward wasn't there. That's why you didn't take any partial at the daily level, and you decided to exit at break even, which was smart. Then opening drive signals, big bid was holding but taking quickly. Very tight candle gave us defined small risk partialing at technical levels, and I like that. Remember what we said? UAL already did most of the move in the pre-market. It was already so extended. It did a breakout in the pre-market, but that was a fake breakout. It was a small breakout. At the open, it opened red. There was a huge bid as a signal. It gave us a 1 minute open range breakdown with a really good risk right there. And that was an amazing run right there. Small reverse ABCD pattern where you added, and yeah, this was really smart. And that's actually one good, smart way of trading the stocks which are extended in the pre-market. Sometimes we're seeing that the stock is making a huge move in the pre-market. It is so extended, and we have FOMO. The stock went without us. It did most of the move. We can't catch it. And at the open, we try to catch that move. When it is so extended, when it's actually better to start looking at it for a short, for a reversal, or for a pullback, just to make some money on the pullback before it comes back to the long side. UAL didn't come back strong. It was just weak. But most of the time, at least what you could do is make money on the pullback after the stock they did a huge move to the long side. You just take it to the short side, make some money there. Once it pulls back, if you find that it's starting to hold some support, starts coming back up, then you could go for a continuation to the long side instead of chasing it. What could I do different? First chart ACB scalps. Let me see ACB. So ACB, you traded this thing to the short side for a technical level breakdown, drop down, pulled back, reverse ABCD pattern, took it for a breakout. There was a confirmation candle, which is the doji there, and you just I'm not sure what the risk to reward was. I think it was really tight because you exited all there, but you could have simply held on to this one, right? It did break down, it did hold the previous support as a resistance, continue dropping down into the daily level, and because it's going into a daily level, we could expect a consolidation around this level. People are trying to long it, people are trying to short it. No climactic volume there, no candles which are showing you that this thing might reverse. So it's not bad holding through these kind of consolidation areas. And then it's just breaking down. This long, I love it. Look at this. Remember guys, we talked about this long, but instead of chasing it and taking it to the long side there, you took it exactly after the hammer. This was like a fake small reverse ABCD pattern where people tried to short it of the 1 minute chart, and then it got them squeezed back up, closed as a hammer, and that was an amazing entry to the long side. I love that. Really tight stop loss, partial, exit break even, and another good entry right there. I think this was really smart. I like this one. The partials here are not bad if you had a really tight stop loss. This right here, after you longed it, I would try to hold at least for the highs. For the partial, I mean, if I am not patient, at least that would be my partial, and then just depends on what you see. Hey, is it possible that even a company has posted quarterly loss news game day before still gapping up by 3% and it's up with income by 10%? See, Shimpy, anything is possible. Sometimes you could see really horrible news on some stock, even some bankruptcy news, and it will just be going up intraday. News don't determine where the stock is going to go. News are just telling us that this stock could be in play. And remember, when the news come out, it comes out late. A lot of people already knew about it. They already did their plays, and it comes to us just so late so that we can't trade those news. We can't short it because it's bad or long it because it's good. We definitely need to watch the technical levels. Let me actually show you guys the bad trade I did. It wasn't bad trade, it was a good trade, but again, I partialed so bad. It's ACB. I just decided to go to the goal, and that's why I exited bad, but this was horrible partials for me. Now look at this, guys. I was looking at ACB, and I love stocks which are chopping around, which are doing nothing in a range. When I see that the stock is doing nothing in a range, I always believe that this consolidation isn't a chop. It is a setup for the stock to move to one of the two directions. Then we're having engulfing after an engulfing after an engulfing. I like this hammer to the long side, but still I didn't like it. Why? I didn't like this 50 moving average. I told you I hate going against the 50 moving average on the 1 minute chart. Even though I had double confirmation candles, it was below the 9 on the 5, it was below the 50 on the 1 minute chart. It was literally hugging it. It bounced out of it 1 time, 2 times, 3 times, and what would make it not bounce out of it a 4th time, right? So I just decided to avoid it and see what it's going to do after. And then again, engulfing after an engulfing, no good confirmation candles until here. I see that it's on the 1 minute chart, finally above all the moving average. It's closing as a hammer on the 1 minute chart. I love that confirmation candle. It's going up, like first it was red, and I love seeing that from red it's going back to green. I take it to the long side at 16.19, put my stop loss at 16.15 or 16, yeah, it was 16.14 actually. The low of the candle, and then I just go for the breakout. I just partialed all at 2 to 1, 16.29. Yeah, it's 5 cents stop loss, and I just exited all at 16.29, which was the range. You could see that this was the range of the chop right there. I just wanted to get into a 2 to 1 and end up my day, but that was a bad move right there. I told you, when you see a setup forming out or a setup consolidating in a range, and here it was forming sort of pennant right there, it means that it is setting up for something. And I went in for a breakout setup, and I'm telling you this a lot of time in our trade reviews. If you are getting in for a breakout setups, it means that if the setup is good, it will usually break out. So the 10 cents were 2 hours for me, and I missed it all the way to 1670. 1670, it's around, I missed around 8 hours. I made 2 hours instead of making a 10-hour trade. So yeah, that was bad trade management. Good entry. That was the breakout, exactly at the breakout, but horrible trade management. And we just learn from each other here. Do you consider the average true range in pre-market, or is just a distortion? I don't care about the average true range in the pre-market, Kiza. I care about the average true range intraday or after the market opens. But I definitely care about how the stock moved in the pre-market. If it's just did a huge move in the pre-market to one direction, I definitely am not going to be biased for a continuation after the market opened. I love seeing stocks trading a little bit sideways, having some sort of small trend in the pre-market, just to go for a continuation after the market opens. But if it did a huge move similar to UAL, if you look at UAL right there, it did the whole move. This was a strong move right there in the pre-market. Then it did an ascending triangle or an ABCD pattern, did another leg up, and look at this. It's just what, $3 move to the long side or $2.50 moves to the long side with no pullbacks. I'm definitely not going to trade this thing to the long side right there. Hey man, can you please send us the link for the library of these sessions? Yes, Marlon, I'll definitely do that once we're done here. Were you ready to take this trade to the short side? If you mean ABC, yes, I was ready to take it to the short side, or ACB, right? It was ACB. I was ready to take it to the short side, but definitely not for a reverse hammer candle, and definitely not above all those moving averages. And definitely I wouldn't have taken it to the short side even if it broke below $16. I would have wanted to see way more consolidation, longer consolidation, and way clear setup. Like here, it started getting clear. It was a reverse ABCD pattern with an M shape. You see that? This is the M shape. Drop down, pull back, but this is not a parabolic pullback. This is a parabolic pullback. Drop down, came back, sort of an M shape. Let's see if we have confirmation candles. We have confirmation candle here. We have confirmation candle here. We have those ones right here. Not a bad short right there. I don't like the moving average so much, but the risk to reward even to this moving average is really good right there. I didn't actually see this because I wasn't there, but yeah, this wouldn't have been so bad actually. I'm not sure it's a clear one. I'm looking at this pennant right there. It could have simply just pulled back. Sorry, this is horrible. Come on. It could have simply pulled back to this area right here, which it held. You see this area it held? It could have simply just pulled back to it and continued the uptrend. It's tough to take shorts after another setup started getting ready. So at the beginning, it was a reverse ABCD pattern, but it didn't do an M shape clearly, right? It formed another setup which is telling you that this is a breakout setup. It's no more an ABCD pattern. This is a pennant, and it could break out to any direction. Once it broke out, we usually expect a pullback to the previous consolidation area or to the previous resistance for a continuation. So this wasn't a really clear setup to the short side. Yes, we missed it, but it wasn't clear right here. Here it's a little bit better. You see it curling below the 9 moving average in the 5-minute chart. It's no longer a consolidation for a continuation to the long side. Wait for any confirmation candles and take it to the short side. Look at this. This is actually amazing. It's getting literally into the support area. It's starting to descend at that area. You're having the confirmation candle on the 5-minute chart. Now this is a good setup to the short side. Yes, we're having M shape here, but this is not a good setup to the short side. This is definitely much better setup to the short side. I hide my PNL, but I always know how much I make because I'm trading in terms of Rs. So if I am risking 1 R and I'm losing two trades, I know that I'm down 2 Rs. If I'm getting to the long side with 10 cents as my stop loss and I'm getting like 60 cents, I know that I made 6 Rs and now I'm up 4 Rs for the day. Basically, even if it's hidden, I always know where I'm at, and there is no use for me hiding it or showing it or looking at it. But I think that was a problem before, but now it's no longer a problem. Not a huge problem. It would have been better, of course, if I didn't know how much I'm up for the day. Then only 4 hours or 3 hours, so it's not crazy green day, but it's a good day at the goal. DG, the value of the R, you determine it. It varies from one person to another. Some could risk $5, $10 per trade. Some could risk $50, $100, $300 per trade. So it varies from one to another. $16.25. Let's see what you meant right there. Let's see. 16.25, that's it. I think I drew it a little bit back. But yeah, you see this, guys. This is the resistance. It became a support, but then this support started becoming a resistance. But yeah, that's really smart stock operator. Once we see that the stock is breaking out the resistance area, we're afraid that the previous resistance will become support for a trend continuation. Then it breaks it down, and this previous resistance, then support, starts becoming a resistance. This is a really interesting way of trading the intraday levels right there. My daily goal is 3 hours, but sometimes it don't stop. Sometimes I'm getting 15, 20 hours. Sometimes it's only 3 or 4 hours. It just varies from one day to another. Today I'm happy with my 4 hours, and I think I'm done for the day because I'm literally at the goal. If I was up 5 or 6 hours in a couple of trades, I would definitely risk a little bit more. So, what was the last trade we watched, guys? I think now we have to watch TEC. Yeah, it's TC now, and then RNA. Thank you, Suyash. So ACB, you have a daily level right there. You went for sort of an engulfing crack setup with the pre-market level right there. This was a good reversal candle. It broke up after the market opened, but wasn't strong enough to go up, drop down, and you got into the short side on the pullback. Now this is a really difficult play. You were really brave taking this thing to the short side. I saw this thing going down and I saw it pulling back. I thought about taking it to the short side, but I was so hesitant because it was really tough. I couldn't really think, or I wasn't really sure that it's going to work out. But yeah, it wasn't really bad. Looking at this, it was a huge drop. It broke the support area, and because it was a huge drop, we could always expect pullbacks. And remember, guys, if you are having a candle inside a candle, it's totally normal. Just even if the stock's trending this way, as long as the candle didn't make a new high or didn't engulf it fully, it's still not bad. This was a really huge drop right there. So having this sort of pullback, it's totally normal. It's not an engulfing. It's not showing you that this thing is going to go to the long side. And especially it went into a technical level and started dropping back down. And I assume that's where you shorted it, right? You definitely didn't short it on the way up. You shorted it after it started coming back down. That's something I was watching for, but wasn't really sure right there. That was a really good entry, really good stop loss. Started partialing on the way down. A lot of partials. I think if I would partial, it would be closer to the low of the candle than at the low of the candle. And once it breaks out, it just depends. But yeah, that was a little bit of over partialing. Other than that, this was really smart. Isn't that harami combo? It's not. Remember that a harami candle, it's a reversal candle, and you love to see it either at the low of the day or at pullback. So the stock is uptrending, it's pulling back, and then you see this type of candle. Now this is not that small, this is strong. This is the first 2 minutes. You definitely not expecting or looking for a reversal pattern on the first 2 minutes, right? It's same thing as looking at 2 minute at hammers inside the chop. You're seeing a reverse hammer, a hammer, a shooting star, a hammer. You wouldn't really care about this hammer to the long side inside the chop in an engulfing, after an engulfing, literally inside the range without even the stock starting to make higher lows, right? So it depends where we see those candles at. But overall, that was a really good trade, DC. Now let's see what RNA did. Hotkey error, you took it to the long side, partialed and exited all out. Then you took it one more time to the long side. This is not a bad long. You could see double hammers right there. It was strong, consolidating the double hammers, and look at these guys. This is a little bit far from the 9 moving average in the 5 minute chart, right? And I'm telling you a lot of times that I don't love taking stocks to the long side if they are extended from the 9 moving average on the 5 minute chart. But if you watch the webinar, there is an exception. The exception was double hammers on the 5 minute chart or double dojis on the 5 minute chart. So yes, here it was extended from the 9 moving average on the 5 minute chart, but we are having a double hammers on the 5 minute chart and a new high with sort of an ascending triangle. You get in for the breakout, and after the breakout, I usually put the stop loss at a new 1 minute low. And looking at where you partialed, I assume you also had your stop loss at a new 1 minute low. Took a partial there, held it through the pullback, which is smart because we know that after breakouts, previous resistance could act as support, so the pullback is expected. You held it all the way to the daily level, which was really good, and then for the break of the high of the day. So I love how you managed this one, and good job, RNA. This was a really good trade. Let's see. Zen, what did you do, Zen? Traded UAL. Now drop down. Now let's see what this was. We're having selling pressure right there, and again the best entry would have been right here, right? Once it did the new 1 minute open range breakdown. This is not bad, but it's just a little bit tough because it already did a huge move to the downside. A pullback is expected. You are having confirmation selling pressure candles, right? You took it for a small bear flag setup. You saw the resistance right there, or the support right there, and I assume that that support was your target because you took it literally at it or closer to it. The rest exited at break even. So yeah, it was a little bit late. It wasn't the worst setup, wasn't the best as well, but it was definitely a decent one. You saw that it didn't continue going higher, so you reshorted it. Now I like the short, but I definitely wouldn't have shorted it on this candle, because we are having now a new 1 minute high, right? And we have a breakdown right there. I would be afraid that it's going to make a fake breakdown. I would have been afraid it will make a fake breakdown and then it will squeeze back up. Looking at how strong it was in the pre-market, so definitely not shorting it at this doji or at this candle. On the next candle, still a little bit risky, but at least you see that it failed to squeeze up and it's making a new low. So this entry was a little bit risky. This entry was was not bad, it was decent, and then you partialed all the way down there. You took it here to the long side, but look at this long right here, it was again late. Like this would have been the best entry to the long side right there. This wouldn't have been bad. It's not the best, but this is not bad because you had a breakdown. You had it holding this level once, twice, it broke down. This was a fake breakdown, came back up, so this was a good long right here. This is a good long right here. This is already a little bit late to the long side, and again a little bit late to the long side. And remember guys, a good entry is the most important thing, or one of the most important things we need to look on as day traders. A good entry will always give you a good risk to reward. If we miss the good entry, we don't need to chase the stock. This is the first 30 minutes, right? You still have around 6 hours before the market closes. You'll have a lot of opportunities. You just need to find a setup with a good entry. If you have a setup with a 10-cent entry, it means that your 2 hours will be at 20 cents, right? If you are late and now it's at 16 cents, it means your stop loss, your 2 hours is at 32 cents, right? If you got the entry which you wanted to get, this 32 will be more than 3 hours. Instead, you are getting only 2 hours. If it was around 8 cents or 5 cents, then that's definitely a whole other story. So the tighter the stop loss, and I'm not telling you to tighten your stop loss, I mean tighten your stop loss when you get good entries. Don't chase it and then tighten your stop loss just to get a good risk to reward, because most definitely or most probably you're going to get stopped out. Henry, let's see what you did there. And Henry, what time frame do you trade this stock from? The 30-minute, right? Was it the 30 and the 60-minute? I bet it wasn't the 15-minute chart trade. So Henry, look at these guys. Henry isn't even using the 1 and the 5-minute chart. 15-minute, 30-minute, 60-minute, and the daily. He doesn't even look at them. On the 15-minute chart, stock dropped a lot. Another drop right there. Got bought back up as a hammer. I personally, looking at smaller time frames, wouldn't have shorted it against a hammer right there. Henry took it for a short at a new 15-minute low. It coincided with a new 60-minute low and a new 30-minute low. All the time frames showed you that this was weak. On the daily, it wasn't that strong. It got into the previous day close and started selling off. So all the time frames showed weakness. That's where he shorted it. I assume your stop loss was 5 or 10 cents, Henry? Or it was at the high? 10 cents. Most of the time it's 10 cents. I'm starting to remember that. So that was the stop loss around 10 cents, and that was a really good reward right there. You got around 80 cents move with a 10 cent stop loss. So good job, Henry. And Ralam, I'll take a look at one trade because we are running out of time. I'm really sorry about that. So let's see what you did right there. Traded NCLH. Looking at the 5-minute chart and the 1-minute candle, it looked bearish, even though it was against view up. You expected it to cross view up. What do you think? The same, or would not enter it? So you shorted it at 12.13, and that was your entry here. 12.13, somewhere right on this candle for the break view up. I don't think it was a bad one. Looking at this move, it was a huge move, and I definitely expected a pullback. It dropped down, pulled back, made lower high, started dropping again. It didn't make an ABCD pattern, so definitely a little bit short biased. If I would enter it, it would be at least around 12.20. Now at 12.13 is just a little bit late for me. I think that this is somewhere or somehow a chase right there. The risk to reward just isn't there. I can't have around 17 cents stop loss on a $12 stock because I will need around 30 cents move, which is a little bit too much. I would want it to break view up and break the next support area and just go all the way to what, to 1180, somewhere there to get to my 2 to 1. It did get there, but I wouldn't really hope for this huge move with a wide stop loss. If I catch this entry, then it's good. If not, I would just simply avoid it. So the setup and you reading the price action was really good, but the entry was a little bit late. So yeah, that's it guys for today. I'm sorry that I couldn't go through the last trade alarm. You could save it and share it with us the next, or yeah, this Thursday we'll have trade review. If you have any more questions, you could always email me or mention me here. And yeah, that's it. Good day, I'm you opening the 1R for 100% of your trades, or sometimes you are risking 0.5. No, most of the time it's 100%. Yes, there is sometimes where I'm risking half R, but I do that only when the setup is not ready. Once I see that the setup is ready, I'm going to full R. I'm never risking half R and going for a reward of 1R. I could start with half R just to get a good entry, but then I will add more to make it full R. So yeah, that's it, guys. Have a good day. We don't want the recording to be late. I will end it here on YouTube, and I will send the link for the playlist and the trade review on YouTube here on the alert, so those who want to watch the recordings could stay with us for a couple more minutes. And thank you, guys.